Welcome, everybody, to the Chinchilla Pickin' Podcast. It is December 22nd, 2024 at 4:04 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the absolute best of the best, Brandon Beaver.
There
Brandon,
you
how are you?
go. There you go. What an introduction. What a well-deserved introduction.
Let's see if it's well deserved. Let's hold off. Uh, how are you doing, man? It's almost Christmas. 3 days of Christmas.
Yeah, doing well. Um, I
Did you
know
get your
this is
shopping done?
fluffy. It was weird that the market moved down last week as far as it did before rebounding again on Friday. I was up 54.5% year to date. Now it's 52.5% year to date.
I was catching you, and then Rig started dropping off a cliff and decided to tank that portion of my portfolio. Thank you, Rig.
Well,
Transocean.
a lot dropped between Thursday and Friday, and I didn't really see much of a good reason for that. It was a lot of after hours moves there, and
A lot of people were
yeah,
saying it was the Fed, man. They're saying that the Fed wasn't going to give them enough cuts uh, over the course of next year, not as much as they were saying they were going to do, and that the fabulous seven, if you want to, big stocks are now expensive and no longer at value or cheap. And so it's priced a lot of people out. Is what they, and these are some of the reasons I've been reading as I read through articles and do some research.
well, some of that's true, but you can't group the entire Big Seven into that. I think that Meta is still at fair value. I wouldn't say undervalued, but I'd say fair value. I think Apple's still fair value in that boat. When you look at Nvidia, yeah, overdone.
I
And
when I look at all right, so Meta I think is close to fair value. Yes, I'll agree with you on that. I believe that Google is undervalued for what it brings to the market as a whole. Um, but I every this is I'm just repeating what the talking heads say on TVs and
yeah,
news articles and everything. You know what I mean?
yeah.
And that's what I'm just letting you know. It's I don't know. Take it what you want to take it. That's what I see and that's what I read.
Okay.
Have you been shopping online or in store or both or what's up?
Neither. I'm behind. I
You
haven't
haven't.
started. I've barely started.
I tell you what, I got all my shopping done. I got lots of gift cards this year, and I have to mail out still a lot more. Have not mailed out. They're not going to get there on time. So if you're a family member of mine listening to this podcast, I'm sorry it's going to be late. I'm just horribly bad at getting that stuff out on time. But it is on its way. But yeah, I think not a lot of people went shopping out in public. Yesterday was the second biggest shopping day of the year, and I was out and about, and I did not see a lot of cars everywhere, and I think that's conducive to more online, yet even more.
Yeah, I think so too. And
I
that's
mean, and we saw like I just told you right before we went on, Party City filing Chapter 11 bankruptcy, closing 700 stores, yet another store having to shutter because it can't reach sales. We've seen a lot of these type of stores go, or at least slim down to almost nothing, like Bed Bath and Beyond.
yeah. Well, Party Cities. It's not just online for them that's eating them up. Walmart and Kroger and a lot of these other retail stores offer the same stuff seasonally now. So there's no reason to go to Party City anymore. You got things of you got better convenience in Walmart when you're going grocery shopping to stop and get your um, seasonal stuff, or even Amazon would do it, but it's a combination of both for them.
It is, and there's moves all over the board here as to what's going on, but we could deep dive into things all day long. There's a million different. That's what I love about our podcast, Brandon, is that each week, I could guarantee you there's a million different topics you and I could talk about. And what makes us us is that we each have our own viewpoint and how we look at things. You bring this, what I feel, and correct me if I'm wrong, is you bring this in-depth analysis of one stock at a time, and it's the one you're looking at for that week, and you do your deep dive research, and it's definitely a good school of microeconomics of a particular company. And I feel like I yin and yang that with my more macroeconomic. Here's my headlines, my news, and when I dive into this news, these are the stocks I come up with that might be buys or sells because of these events that are happening.
Yeah,
And I feel like because of that, there's a million things we could talk about, but we choose the ones we do, and that's what makes chinchilla picking.
yeah.
So it makes us, right?
Rather than watching, the talking heads and they're like, "Oh, buy stock X because everybody loves it and it's so great." Well, pump the brakes a little bit. Let's do a research and see what the valuations are, right?
Exactly, exactly. You know, and if people would go online and read that article by Brandon, it's on the website. It's a great article, how to really judge a stock, or I don't even know what you word it. You need to write a book about it, but it's a good article, and you can use that. So if you find a stock, a company, and you want to know if it's a good one or not, go online, read the article, and follow
Yeah,
those steps.
yeah. You're
Bing, bang,
valuing the
boom.
company.
There you go. You need to write that book, man. I'm telling you, I would buy it. You got one. You got one buyer.
Okay. All right. I mean,
Got
that's good
one.
because it would be a very boring process for me.
All right. Well, how
I
about
like to learn new things rather than write about things I already know, if that makes sense. And so it would be, I'd have to find new subject matter to write about a little bit, at least, in order to keep my brain occupied and entertained.
gotcha? Well, I mean,
Otherwise, it's
yes,
very bland.
yes, and we don't like bland. We don't like bland. We want to spice it up in life.
So I guess if I do write this thing, I'm not doing a very good job of promoting it right now.
Dude, horrible. Don't buy my book.
Yeah, it's gonna be boring. It'll be helpful, right? It would be helpful, but it would be boring.
Uh,
That's why I
that's
don't want to.
funny,
That's why I don't do it.
right? Exactly. All right. How about we get into it? They didn't come here to listen to us talk about our shopping and books and that. They came here to listen about our ideas on investments.
If I could just spend the entire first chapter of talking trash about Jim Cramer, then I would. That would make me happy.
That I would love. I would love to go to Wall Street, you and I, and have you actually stand behind Jim Cramer and just boo him. I would love that. That would. I wouldn't care if I got kicked out of the
The smell,
NYSE.
the smell of sulfur would really bother my sinuses, Dave.
Nice. Nice. All right. Transitioning now to the show. Rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You're here to lie back and forth to bicker and banter right here on the show for you. Brandon, as always, you have the floor. Take it
Yeah,
away.
let's go. All right. So one of my victories for this year so far, albeit a small one, underperformed the stock market, but it's up so far. So I'm fine. I'm up about 22% on Disney. Um, finally held that for a while. Bob Iger has now christened the Disney Treasure, which is a 1,119-foot long cruise line ship. 1,000 drones created shapes like champagne bottles and images from Disney movies during the event. Wouldn't that be hilarious if that was what people were seeing in New Jersey? The entire thing was just Disney.
Seriously, that would throw yeah, that would be hilarious. And it's all because of Bob Iger.
Yeah.
Surprise Disney promotion. New Pixar movie coming out next week.
People start shooting down Disney drones.
Right?
All right, so for Disney, we all know that growth has been slowing in the parks and legacy business, and they're trying to pick up that growth in the entertainment aspect of cruise lines have been growing um, all across the board for just about every company. So Disney is planning to invest 20% of its $60 billion over the next decade in the cruise business, primarily. They're aiming to double their fleet from 6 to 13 ships by 2031 and internationally. Cruise travel has surpassed pre-pandemic levels in 2023 with 31.7 million cruise line passengers for the year.
Wow.
Yeah. So quite a bit. Cruises really picked up popularity probably I would say around 2017, 2018. So I think Disney's kind of behind the ball on this, but this is one of those cases where it's better late than never. Sometimes timing can be a really bad thing, and if you're late, not so good. But I think in this situation, the cruise lines they're going to continue to grow, and I think I would rather have them be late to this than not do it at all. But go ahead, Dave.
Yeah, that's a huge jump in cruise. Back before pre-pandemic, you call this. I give you credit, all the credit in the world. You called the cruises coming back. I doubted it. I didn't believe it, but you once again proved me wrong on something. So
Yeah, I like I said, I think Disney being late to the game here is better late than never at this situation. I trust what Bob Iger has in store. I think that what he's doing for Disney is good. We haven't seen the complete turnaround yet. Larry Culp took over General Electric right back in 2017, I think is when he came back. It took us all the way until really this year to see the full effects of his policies. So it took a lot of patience for General Electric, right? So we'll just talk real quick about one of my other wins here, and that's General Electric. So Larry Culp took over the company. Actually, it was in 2018, not 2017, but 2018. There were serious questions about whether it would even survive. He restored the balance sheet, announced plans to create three new companies: GE Healthcare, GE Technologies, and GE Vernova. That was announced in November of 2001. I bought in November of 2001. We did an entire show on this in November of 2001. Healthcare has been the least successful, returning just 29% since the spinoff in January of 2023, lagging behind the S&P 500's 53% rise. But GE Vernova, which was supposed to be the big problem with GE, right? The money losing thing, that's gained 154%. GE Aerospace has gained 62% this year and is up 194% since the spinoff. So, since the healthcare spinoff, sorry. So, but I mean, that was sometimes investing my way takes a lot of patience. This was
yes, it does.
3 years worth of waiting, and up until now I've sold GE Healthcare, I've sold GE Vernova, I've sold both of those stocks. But if you add it all together, the gains that I've had from GE Aerospace by itself, I've tripled my money on. Add it all up, I've more than quadrupled what I originally put into the first GE stock before the spinoff. So good times.
That was a good call. And Vernova is still going to go higher because they just inked those deals to build those mini nuclear power plants next to data centers, and that's going to be a big breadwinner for them.
I made a mistake by selling GE Vernova. I wish I wouldn't have. That was a mistake on my end, but you don't go broke taking profit, so it's an okay
Yeah,
mistake.
yeah,
But
and selling too early because you've made your money, you made some profits, and you believe that it's at where it's at, and it's going to stay where it's at, or it's going to go down from there is not a bad mistake to make. You know what I mean?
they're making investments in the right way. Now they haven't turned a year-over-year profit in this space for a very long time. And it's still not happening. This new company hasn't turned a year-over-year profit, but I think it's coming. And you were just talking about the power plants near the data centers. Those increase, and I'm gonna talk about a company that's gonna build its largest data center ever here in a few minutes. That's gonna continue to be the news. With artificial intelligence, electric vehicles, we're going through a new transformation of how energy is distributed all across the globe, not just here in the United States, but across the globe. And there's a re-electrification, which I've talked about going on all across the globe. GE Vernova is going to be a huge beneficiary of that.
Yeah, it's not the only company either. I'm going to talk about one coming up that is also inking deals, going to be a huge beneficiary. There's a lot, the re-electrification. And I will say this, if you've listened to our show this year, then you know this is a true fact. True fact. Brandon got on this show, and this is why I say you're a very intelligent person. Is you came on this show and you talked about how you believe that the next big investment was going to be in powering data centers,
Mhm.
and you said that on the show. It was 2 weeks before anybody on CNBC, anybody on Bloomberg, anybody across, because I have subscriptions to all these places and I see the headlines before they started talking about it and before those stocks started moving. So if you had listened to the Chinchilla Picking podcast and you said, you know what, this I believe in this, this is actually going to be a good thing, you would have made tons of money just in 1 week because once they started announcing it, then those stocks just shot right up.
Everybody was distracted by Nvidia and Tesla. But I was thinking about, okay, where's the next value play at and who's going to power those things,
Right?
right? That's where the play is.
Yeah. Right now. Yeah, and GE Vernova's really got a good spot there.
Yes.
So
Yep. All right, let's move on. I could transition into my data center right now, but I'm going to go into something else that could also transition into it, so it'll work. In the advertising sector, there's been a lot of disruption, right? A lot of disruption, mostly digital. And so a lot of this is going online. A lot of it's coming from TikTok, Meta, um, Google. Over the past 10 years has just been a constant thing, and it's starting to have an effect on this industry. Omnicom Group is in talks to acquire Interpublic Group. These are two of the largest advertising groups right now, but they're having a lot of trouble keeping up with digital. So they think combining the two companies to create what would then be the largest advertising pure play, I guess you could say, in the market, um, they think will solve that problem. So,
and
uh,
this is advertising because again, I before the show started, you said you were going to talk about this, and I was like, I don't know anything about this or what's going on. And these are just advertisers within the media industry, correct?
these are marketing companies, yes, that
Marketing company.
advertise.
Okay.
Yes, yes. So now this is an all stock deal, which I don't like. I like all cash. Give me the money, right? But this is an all stock deal. Likely to value Interpublic at between 13 billion and 14 billion dollars, excluding debt. Their market value, this was of 2 weeks ago, by the way, but it was $11 billion. The combined entity would have a revenue of more than $20 billion based on last year's figures. This merger would surpass WPP as the industry's biggest player, so it'd make the largest marketing advertising company in the United States. Um, it would consolidate many well-known brands under one roof. I'm not going to go into the brands because a lot of people probably haven't even heard of them, but let's just say this. Omnicom and Interpublic have created iconic ads for brands like Apple, MasterCard, L'Oreal, California milk producer Board. Um, so, there's a lot of different players here right now, but a lot of those ads have been on legacy television, not on the internet. So, um, Omnicom and Publix Group's previous merger attempt failed in 2014. That collapsed. So, there's a lot of uneasiness, or I guess you could say unknowns as to whether or not this is actually going to go through. It could face a government block based on, the idea that it could be a monopoly. It's not, but it could come up that way with the new administration coming in. I doubt that that's going to happen. It's probably going to go through at least. I don't think the government's going to be taking too big of a look at this right now. Generative AI is disrupting traditional advertising roles, reducing demand for certain jobs. Automation is expected to lead to the elimination of 33,000 jobs by 2030. Um, So a lot of that's going to go automated. When I say elimination of 33,000 jobs, it's going to create efficiencies that help us save money and create jobs in other spaces. But just from what's in front of your face, just from the looking at it from where we're at right now, it's 33,000 jobs are going to be lost, so to speak.
Yeah, I mean 32,000 jobs that currently exist, but like you got to remember too, when kids are in school right now, they're eventually going to be working jobs that do not exist yet when they
Yeah,
become
exactly. Well,
when they're
then
in
that's
their
kind of the
30s.
point. And the reason why that there's jobs that do not exist yet that will in the future is because we go through transformations like this and we modernize.
Yeah,
The great thing about capitalism that we're able to do that.
right?
We
Exactly.
don't want to live in,
Innovate,
in a socialist country that's still driving around cars from the 1950s, not because they're classics, but because that's all you have access to.
right?
And there's no innovation. We want innovation. It's a good thing for the entire economy. Um, Interpublic has lost business from major clients and has actively been seeking buyers for parts of its conglomerate. They've sold off some agencies to invest in technology and principal buying. Um, Global ad spending is expected to top $1.03 trillion, excluding political advertising, according to Group M, I guess another probably marketing and research firm. But they're not, as we're moving forward here, we're modernizing, and there's more technology coming in. The ad dollars are there. They're just not with these companies right now.
Right?
They're with Google, they're with Meta, they're with TikTok.
Yep. TikTok's big right now. There's a lot of people making a living off of just marketing products on TikTok.
So the lesson here, and that's true, but the lesson here is that these mergers and acquisitions aren't always necessarily a good thing. Oftentimes they're indicative of a highly competitive market where people are struggling to get one up on their competition. And this is what this is right here. This is a struggle. This is a Hail Mary for both of these companies to try to survive in the future.
Right. I didn't look at their bottom line numbers, but I mean, yeah, they are pulling in, what is it, 24 billion top line, and then EBITDA was 3.9 billion, free cash flow of 3 billion. Um, but I didn't get to see if they were actually profitable or not because I didn't see that there when I was quickly reviewing it. Do you know if they are profitable?
Not off the top of my head, but revenue has been declining, and so has their customers. So their customer
Gotcha.
base has been shrinking,
Gotcha.
and it's all been because of this digitization of ads. I mean, if you look at Meta, look, dude, they don't have to invest in a huge workforce
Yeah,
for
that's true.
advertisements. It's all AI driven now. And speaking of Meta, planning to build its largest data center ever in Louisiana for $10 billion. Dollars.
Wow. All right. So I pulled up the numbers here because you know me. I'm curious and I want to see. They actually have a dividend payment going out right now, yield of 3% on the dividend.
Which one? Which
Not
company?
bad.
Which company?
It's Omnicron, OMC,
Okay.
Omnicron, OMC. Um, and that's the one that they're going to, the combined company would be under this ticker symbol and this name.
Mhm.
So this will be the one to follow if you are going to look at this. And Omnicron was profitable, and their revenue by themselves of 15.4 billion. So the numbers I was reading before were the numbers I saw for the combined company. But Omnicron by itself has a P/E ratio of 11, earnings per share of $7.32. So not a bad, a pretty healthy looking company if you ask me.
On the decline, though. I don't think they're
On the
ever going to
decline.
see, unless they can. I mean, they get plans to try to incorporate artificial intelligence and digital ads, and try to get better into that category. But they've been on the decline since then, and the legacy advertising is never going to be as big as it once was.
Gotcha.
So.
All right. I agree. I agree. I think it's social media is where we're at. People advertise like on the Instacart because you're actually shopping. And so, you're advertising right there when they're looking at food or cereal, you're advertising your cereal brand in the moment to them, and is being more effective than doing a TV ad.
Right, and
Now TV ads are only effective for like huge events such as like Super Bowl or World Cup or things like that.
that's why you see that price to earnings ratio at 11. Maybe it should even be lower, but that's justified because it's got slower growth in earnings now, and is expected to continue to slow unless they can pick up the speed. Unless this merger goes through and they're able to actually, um, to be more agile and to change for the better. Now, I've yet to see in the history of ever a merger that creates a bigger company that's also leaner. So we'll see how it goes.
They do tend to be if with these companies when they merge, they do make a leaner overall company. They combine certain parts and then they uh, l- let go of such big percentage of the total population of their companies, but they do that in order to be more nimble and quick, and that's
Well,
why.
there's gonna have to be restructuring and spending
Yeah,
on restructuring for that to happen too. So I think in my opinion, more downside for Omnicom.
gotcha, gotcha.
Now, like I said, now on the flip side of this, the winner, in my opinion, and I am a shareholder, so I will say that out loud, just so people understand there might be a bias there. I try not to allow that, even in my investing. But Meta announced plans to build its largest data center ever in Louisiana for $10 billion. The data center will be twice as big as the Superdome football field in New Orleans.
Man, nice.
Yeah. Um,
Did
the
they say
data
what
center
part of
will,
Louisiana?
huh?
Did they say what part of Louisiana?
No,
Is it down there by them Gators?
it might be. Oh, the data center will require a vast amount of power, similar to the Hoover Dam provides. Man, I can say this because my family's from the South, but man, you got the South and the French. Gosh, dude, that is a smell that you cannot get out of clothes.
It's called Cajun, Cajun, the raging Cajuns down there. Come on, man, the Cajuns. Uh,
All right, Meta is contributing funds for the plants, including equipment reservations, power payments, and financing transmission lines. The project is expected to cost over $3 billion. It's going to benefit multiple companies here. And Entergy, Mitsubishi Heavy Industries, Siemens Energy, Energy Transfer, Kinder Morgan's all going to be involved in this. And once again, energy expected to be the biggest beneficiary here as far as the sector goes because of this huge thing. Meta will pay a minimum monthly charge to cover a full annual revenue requirement for the generators for 15 years. And that's coming from Entergy, the company Entergy, not energy, but Entergy. Um, so yeah, huge announcement here from Meta. You might want to play Entergy off of it, but it's probably already priced in, to be honest with you.
yeah, at this point, everybody's made moves into these energy companies except for one, Brandon.
All right. All right. Cliffhanger. I had something else to say on this, but oh, here it is. The data center will require a vast amount of power, similar to what the Hoover Dam provides. So what the
That's a
Hoover
lot of
Dam,
power.
yeah,
It's a lot of power.
again, re-electrification of the globe, an energy revolution that is happening right under our noses.
Yeah, and nuclear power is where everybody's pointing at where they want to go, but it takes years to get those permits and everything in place before you can even start building. Then a couple more years to get them built. So it's these are not things that are going to go online tomorrow. So if you're investing in these companies based off of like let's just say GE Vernova, you want to invest in that because they're going to be they've signed contracts to open a bunch of these smaller mini nuclear plants, if you will. Well, they're not going to see those returns for 5, 7 years. So you're doing a long term investment here, and you want to keep that in mind.
Exactly.
If that's the reason and why you're buying that company,
Right.
keep that in mind.
Right. Diamond hands.
Diamond hands, yes. Tristan hands.
Yeah. I sat through, and this is another one of those companies too that I sat through like 10 to 15% losses on. General Electric was before
Hmm.
I started to realize the gains. And, I was buying it as it was lower too. I did the same thing with Meta. When it decreased in value, I think it went down to like $47 a share before the split. And before it increased, when the split started happening, the stock started to come back up. But this was like 2022. I think it was like $47 a share and I bought in at like 57. So I
Yeah.
was sitting through some pretty hefty losses there and just buying more and more. But you have to have conviction in what you believe is right. And then
Yeah.
hopefully you're right.
Yeah. And so I got a number of good examples and points to pile on here of what you just said. Like, right now I'm down in rig. I bought rig. It was right at $4 a share. I'm down. Transocean is just killing me. They launched the biggest oil rig in the world and already have it leased out for 3 years, and people are selling the stock. And I'm just like, what is going on? They just like added another 15, 20% to their top line.
Yeah.
Well, why are we selling the stock? But it's an overall sector sell. Got to wait for a rig to start actually seeing some money from that lease come in. You know what I mean? There's a lot of things behind it, and I got conviction I'm going to hold. But it also reminds me of because if anybody here's a Star Wars fan like I am, there's this scene in Return of the Jedi, right?
Mhm.
And it's where Han Solo and Luke Skywalker meet again in front of Jabba the Hutt. And Han Solo still can't see, and he hears Luke, and he turns to Luke and he says, "Hey, how we doing?" And Luke says, "Same as always." And Han replies, "That bad, huh?" And it's like that's how I feel every time I first buy a stock. Like I feel like the universe knows, and they're like, "We're just gonna sell to test you. We're gonna test you and just sell right away." But I always end up profitable because I hold, and I bought it for true fundamental research reasons, and I believe in the future, whatever company, and I hold and I wait, or I dollar cost average. So I do one of those two things, and I end up, like I said, most of the time I make money, man. I think I don't know. I haven't looked at my percentage in a while, but last time I looked at it, it was at 80% correct. So or profitable on a trade or investment. I guess I'm wrong, but
Yeah.
80% I'll take any day of the week.
Well, and it always it goes back to me too how these fund managers are just completely full of crap because how they get you to buy into their funds and to use them as investors as they tell you they preach this market efficiency theory which has been wrong since the day that it was introduced into the market. And the market efficiency theory essentially is just saying that anytime something's announced, it instantly gets priced into the market and you can't beat the market as a result. The market's ever rarely ever actually efficient. It's a pendulum. Picture it as a pendulum, swings back and forth. You know, oversold, undersold, overbought. It goes back and forth. It's rarely ever actually in the middle where we think that it should be.
Yep.
And individual stocks are the same way.
This is why we have a VIX index and why you can actually trade options of the VIX index.
Right.
Yeah,
Oversold
you
and
have a
overbought,
derivative of a derivative of a derivative.
which is still very highly risky, but it is. It's, oversold, then overbought, and then oversold, then overbought. Rarely ever actually in the middle. It almost always comes back to the middle at some point, right? In time, but it rarely stays there for very long.
Which is another reason why you can short the UVXY and just sit on that short position because it typically always goes down over time.
It does.
I mean, look at the chart; it speaks for itself.
Yeah.
People have made a lot of money doing that.
All right.
All right,
I
now
know
we're
buying
just
the
dead
puts
quiet,
on.
staring at each other. What's going on?
Well, I know buying the puts on it's still a very risky thing because when the UVXY actually does go up, it goes up very quickly and very sharply,
It
right?
does.
Which is why, I mean, it's not as easy as you just made it sound that it
That's true.
theoretically should be.
I kind of like really simplified. I
Yeah.
oversimplified it.
Yeah.
Yes.
But it is designed to go down over time. I don't know where actually shorting it. I've never actually really tried that personally to actually short it. I've had puts on it before.
I've done puts and calls on it as well. Like it's very risky. Like you said, it
Right.
moves when it does move, it moves very fast, very hard, one way or
Yeah.
another. So,
Yeah. And so for example, if you have a put and these puts have expiration dates on it, so you have to have the timing right on it too, right? And you got a put that's being, fairly profitable and you're in a good spot, but then something happens with Israel and Iran overnight and then you're screwed the next day. So you do have to be careful with it.
yep, and that's happened many times to many traders.
Yeah. Yeah.
Oh man, can't
Yeah.
even begin to talk about it.
And not even just, I mean, just with options in general being that risky. I had years ago when I traded options, I had a nice call on Walmart. A very nice one. I was sitting pretty, I was getting ready to sell it the day the market opened. And then pre-market they announced their acquisition of Flipkart, which over time wound up being a really good idea for them. But it was one of the largest acquisitions they ever made in history, and it made the market very, very, very uneasy about Walmart. There was a big sell-off in Walmart pre-market, and I took a huge loss on that call. It's it sucked.
Yeah, I remember when you were trading options very regularly. You and a mutual friend of ours, Amber, were texting me like 3, 4 times a day. Hey, I'm up 80%. Hey, I'm down 40%. Hey,
Yeah.
I'm up 120%. Hey, I'm down 150%. And it was just
Yeah.
crazy.
Yeah. So I did options for 2 straight years because I wanted to become good at them, right? And the first year I was terrible. The second year I was good at it. And
Yeah.
really by the end of the first year I started to become good, but the second year I was actually really good at it. But I still, I would have these 100 to 120% swings. Sometimes it would go down 50%, then back up 50%, down 30%, up 60%. And sometimes that would happen in a day. And at the end of the second year, when I realized that I was up 30%, which is where I would have been if I just bought and held stocks, and I thought to myself, like, man, just buying and holding, I'm not getting as many gray hairs and I'm not shaving years off my life for stress. It's a much easier thing to do just to buy the stocks rather than play the options.
Yes, yes, it is. It is. Yeah, and don't. I would not recommend day trading unless you are very experienced and you know what you're doing, and you're not dependent upon that money to pay your rent.
Yes,
So, all
exactly. Yeah.
right, moving on. We got a few more minutes left, and I want to cover one company real quick. All right.
Yeah.
So this is a company that I've covered many times on the show before over the years. And this is a company that Nick Young, who's been on this show before, a contributor, he's come on and he's also talked about this company. He currently owns this company, and this is one I found years ago, and it's KULR Technology Group. So yes, I'm bringing it up because it just took a big jump up. If you're listening right now, I knew he was going to talk about. Well, yes, I'm talking about because it did take a big jump up, but that's not the only reason why I'm talking about it. It took a big jump up because of the contracts it's announced, right? So let's delve into some of these contracts. Let's talk about the biggest one first. The elephant in the room here, Nvidia. So KULR Technology Group, a leader in energy management and vibration reduction solutions, they announced a deal with Nvidia on their Jetson Edge AI platform, right? So what KULR does is they build solutions for batteries, for hardware to make it so it doesn't overheat, it doesn't vibrate. It's able to last longer. It's able to work quieter. It's able to stay cooler longer, which is why the company is called KULR Technology, KULR if you're listening. But these are things that it does. So if you get a battery and you use a cooler battery pack or battery solution with it, that battery is not going to overheat. Sometimes you can feel your phone getting hotter. Like and so, like Tesla with some of their batteries have caught fire. Uh, there's applications everywhere, right?
Mhm.
So this is one that Cooler has signed a deal with NVIDIA. The edge AI market size is projected to grow from 24 billion, which is currently at, to 356 billion by 2035. So that's a huge jump in growth for the AI edge platform. Now, what Coolers is doing with the AI edge is it's using its technology to minimize mechanical stress, enhancing the reliability and longevity of the edge devices. It reduces by doing this, it reduces the vibration down to virtually zero on the AI Jetson programs. So it allows the hardware to run longer and even harder without fear of overheating or vibrating and breaking down over time. It's going to last longer. Um, it's able to work in harsh environments because the cooler technologies provided solutions for NASA many times on all of its Mars space missions, on many of its satellites and other missions out into space. Coolers partnered with NASA for years. I've talked about in the show. There are members of Cooler's board that are generals in the military, so they have a great, strong partnership with the military. But some of the other aspects of Cooler that we haven't looked into are data centers. Because I know Brandon was talking about this, and I said, hey, that's not the only area for data centers. So, data center fan cooling systems are able to run more efficiently and environmentally friendly with the cooler system also applied and engaged inside of them. They have they have diminished mechanical breakdowns, extended lifespans of wind power turbines, leading to longer increased energy efficiency. In regards to Bitcoin, they have actually lowered the energy consumption of the mining, like those mining computers that you see, like warehouses full of them mining Bitcoin. It lowers the energy consumption if you use the cooler systems and platforms in regards to those computers and hardware as well. So there's so many different areas of this to go that there's just so much upward growth here and potential for Cooler Technology Group. I believe NVIDIA is just one of many big companies now that are now eventually going to jump on Cooler. I know when I talked about it last time, I talked about they moved their headquarters to Texas, right near Tesla, and there's always been rumors of a Tesla and Cooler partnership, but has never come to life. But I feel like it's getting close to coming to fruition because Cooler's just continually to grow their products at such a rate and at such a at such a time when we need this electrification, if you will, Brandon, like you said, of our network. The Cooler Technology Group is poised to really jump on it. I don't believe it's stopping at the price jump where it's at now, which is 10 times where it was a month ago. I believe it's still going to continue to grow from here on out for years to come.
Okay.
I have owned it. Just for clarification, I've owned it many times. I've made money off it many times. At current time, right now, I do not own it, but I have made money off a cooler every single time I have traded it. I've made money and I've been profitable with it. And I'm letting people know right now. I believe it's even though it's had a huge gap up, it's still a good time to buy.
So over the past just about a month, let's see where it was. Well, let's go November 1st, 2024. November 1st, this was down at 27 cents.
Yes.
27.95 cents, really.
Yep.
Now at $2.90.
Yep.
Quite the jump.
Very big jump, and that's what announcing contracts with NVIDIA will do. They also had more contracts announced with NASA. of paying for in millions of dollars for just one mission here, one mission there. Each mission's paying out few $1 million to KULR Technology Group each time.
Nice.
So they're getting some nice big paydays and contracts. I think Nvidia is the biggest one that they've landed, but this company is newer, and they're going to continue to land more. And that's why I
Okay.
say they still have. If you have diamond hands and you're willing to ride the ups and downs, because there will be downs, like we just covered. I believe KULR Technologies is a good one to buy, and just forget that you own it.
It's going to be very volatile. It will
Just
be with it being a new company. I mean, it's only been around for 9 years.
yeah, buy it and forget you own it. Yeah, that
Okay.
would be my recommendation.
Yeah, put it off into a different account that you're not looking at. Yeah,
Right there you go.
because it can be easy to panic.
Yeah, especially on those 30% drop days.
Yeah,
Yeah.
that would be like trading an option. You know, no expiration date on it, so that's kind of your competitive advantage there. But
Yeah.
volatility wise, it would be.
Yep. All right, Brandon. In our chat group, personal chat groups, I told you I would ask you this, but before I hear you answer, I want to cover some facts. Santa Claus rally. What is a Santa Claus rally? A Santa Claus rally is where the stock market moves higher in the time between Christmas and New Year's Day. Will we have a Santa Claus rally this year? Well, here's what I've read. I've read numerous Reuters articles on this because everybody loves talking about this at this time of year. It's more of a fun, article to read and write. I'm sure for these authors have to write serious articles all year long, so this is more of a fun one. But with December down so far, are we going to see a jump in the last week of the year? Typically, the volume is lower. So typically, you don't always get a Santa Claus rally. Brandon, while I read a few of these stats, can you tell me
With the volume being lower, though, if it's tipped towards the buying side, the stocks can actually increase much higher because there's not going to be as much selling. So if we're on the buying side of this with the low volume, it's actually probably a decent setup to have a Santa Claus rally of some sort. Now, I will say
you weren't
this.
meant to say anything until
Oh, sorry. Go ahead. Go ahead. Okay.
gosh, look at it. You're going in. You're already going in and defending whatever cause you wanted to say. All right, so yeah. If you could look up the history of Santa Claus rally, that's the only thing I didn't have in front of me, Brandon, a historical time while I cover these stats here real quick, right?
Mhm.
The S&P currently is up more than 24% for 2024, even after a big fallback and pullback this past week, which usually has historically meant that we have a strong annual close. So the last week we have a Santa Claus rally on that. This year, again, they're saying that we may disappoint. It may actually be different than that because of the news from the Federal Reserve this past week. The market also looks like it's healthy beneath less healthy beneath the surface, according to some Reuters authors. They're saying that it's just not as deep. These companies are not as deep as we once thought. The numbers aren't there to support the valuations. Like we said at the beginning of the show, some of these stocks are seen to be expensive and not valued. I know we said Meta we believe is valued, but some of these stocks are becoming expensive, and that's going to feed into this. It's also going to feed into the time that we want to take some, sell some profitable stocks for tax reasons at the end of the year. That's something you also see, and maybe some cyclical moving things around from one to another, rebalancing portfolios is something you also see at this time. The Again, most of these authors I read, I'm reading my notes here, has said that the one person said the stock market is extremely expensive and the Fed is not going to be as accommodative as they have been thinking. That's what one author said. Another one said it's setting up the market for a rebound. That yes, is there further follow through on the downside that could be a little more dangerous to the bullish trend. A lot of these people have been negative right now, Brandon, and it's just wow. Another one said it's been a strong year for the market. You can make an argument that we kind of got the year-end rally in November instead of December. So most of these are saying that we are not going to get a Santa Claus rally, and
Well,
they're actually very negative and bearish in turn. Brandon, I'm going to give you the floor now and let you talk. Go ahead.
we had a big rally after the election, right? So we probably pulled forward a little bit of the rally. 75% of the time, the market is positive. The S&P 500, that is positive between Christmas and New Year's. I'm going to
Gotcha.
say it's going to stay the same. I think it'll be positive. I don't know it'll be a huge rally, but I think it'll be positive. Number one, because I want to stick with the 75%. We'll just say, it's better than flip a coin. Number two, because everybody's negative.
Right? If all these analysts and authors are coming out here saying all these negative things, I mean, I found one negative thing after another negative thing after another negative thing. I mean, you could tell when I'm reading on this podcast because right there I was reading from what these guys were saying, and it was all negative. I couldn't
Yeah,
believe it. I'm
yeah.
like, where are they coming from?
Yeah, and when they're all these analysts are overwhelmingly negative, I go positive. So,
And like you said, I'm glad you looked that up for me while I was reading off those. 75% of the time, we have a Santa Claus rally. So,
mhm.
and it is typically lower volume though. A lot of people have met their year-end goals and they just don't want to lose any money in the last little week, so they just kind of sit back and rest.
Yeah.
And so that's what you see here in this time between Christmas and New Year's.
We're not going to have that. We're not going to have a lot of news between now and then, unless something globally happens, unless there's some sort of, uh,
Geopolitical event.
political event, then there's not going to be any news.
Gotcha. Cool. All right, Brandon, that is all I have for today. Are you ready to do final thought?
Yeah.
Go
Final
ahead,
thought.
man. Final thought.
I had it and then I lost it again.
Okay, here I'll go with my final
You know what?
thought.
My year over. Let me say this: my outlook for this year was wrong, but my portfolio was good. So
I tell you what, my outlook for this year in January, what I said was right, and my portfolio was average, but it was good in compared to S&P. I beat the S&P.
yeah,
So I mean, you could say it was good, but
yeah,
for me, that's average.
yeah,
And it's harder to be good for my standards the larger it gets.
yeah.
You know what I mean?
Right,
It's harder to keep that
right.
higher percentage going year after year. But yeah, still.
I
Uh, Go ahead.
I never invest based on macroeconomic theories because I mean, even the theories that are time tested, you just never know when they're going to come to fruition, anyways. So it's pointless. You have to invest based on time-tested microeconomic theories, just based on is the company undervalued? And then you
Yeah.
throw out all of your politics, all of your political ideas, all of your economic, biases, and you buy. That's it.
And you're right. You're right, and that is a strong point. I do day trading. That's very little what I do anymore. A small portion of my portfolio is what I do day trading with. Majority of it is in investments to sit there and make a huge return. I had this year was on Nova Nordis. I put a lot of my portfolio in there. I was completely overweight on Nova Nordis this year, and I made a lot of money though.
Hmm.
But I let it sit. And then once I saw signs that the tide was turning and it was going to come back, I sold. So
Right,
like you said, I used the microeconomic news to really push that. But
right.
macroeconomic news allowed me to see that though.
Yeah.
My and by the way, Novo Nordisk is at $86 a share, so that was a good call to sell when at 134 when I did.
Nice. Nice.
Um, Here's my thing: KULR, still a good time to buy. But again, it might come back down. When anytime a stock has a big gap up like that, you're going to see some pullback, profit taken. People, rightfully so, taking some money off the table because they made some. This is the first year that I really got into ETS. I'm still going to hold my position in that. Like in that, I'm not adding anymore. So if you hear me and you know me, a lot of our listeners will reach out, instant message, direct message. I'm holding it. I'm not selling it, but I'm just not buying anymore. I hope that answers everybody's questions on that. Um, but man, right now Bitcoin at 94,000. Another question that was asked: is it going to go back above 100? Yes, yes. But when we knew there would be a sell off, but we just knew that the bottom of Bitcoin had moved higher now. It was no longer at that 50,000 mark that it was earlier in the year, or 45, I think it was. Um, Now it's up a higher level bottom. You're still going to see the volatility up and down in Bitcoin.
Mhm.
And so if you're wanting to invest in Bitcoin, it's not always up in a straight line. Just keep that in mind. Um, but yeah, that's what I'm looking for this week. The Christmas break, no markets trading on there, but yes, I think there'll be a Santa Claus rally. That's something fun to talk about and do. But yeah, do we actually make investment choices based off of historical trends of a Santa Claus rally? No,
No.
but it's fun to talk about and look at the data and the stats on. So.
Yes.
All right. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money, except for Amber. All right. Have a good night.
Have a good night.